An automated market maker enables traders to purchase and sell certain coins. One asset's price increases in price when more people purchase it, and because there is more of it when they add another asset, the price drops. In essence, it's supply and demand, but an algorithm is used instead of a person. Hello and welcome back to Metaverse. In this video, we are going to explain what automated market maker is. Let's get started. What automated market maker is and exactly how does it work? Sample scenario. Imagine you're a potato farmer. You're sick and tired of seeing potatoes all over when you get to work. Even when you can prepare some potatoes, you still go home and eat more potatoes. You find that you don't want any more potatoes in many intriguing ways, but here's the real kicker. Even if you reside in a hamlet of potato farmers, you can't actually exchange your potatoes for anything else. It would be nice to trade potatoes for something else like apples. So here comes a trader with access to a boat, who discovers an apple growing town in the east that is likewise sick of eating apples. The apple farmers have put up 50,000 apples to add to the apple-potato exchange business. The apple farmer said, "If you can give me 50,000 potatoes, we can start. I am here to see if you would like to invest in a trade." When your wish has come true and you don't want the chance to disappear, you begin the trading process. As a result, your community holds a meeting and decides to participate in the trader's trip to exchange apples and potatoes. The trouble is, even though I have a magical genie who will keep all 50,000 apples and 50,000 potatoes safe and sound in his magical lamp, they won't stay that way forever. However, he seeks to maintain a perfect balance between the worth of the two. The trader continues because they collectively add 50,000 apples and 50,000 potatoes. Both of them desire the sum of these numbers to always be 2.5 billion, or 50,000 times 50,000. In this approach, if there are fewer apples one year, the price of the apples will increase. If you're wondering what the magical genie mentioned, it's the formula for a constant product automated market maker, which is a type of automated market maker. It employs the inverse formula x times y equals k, where x and y are the numbers or quantities of the things you have and k is a constant that never changes and always remains the same. K in this situation is 2.5. For instance, a perfect 50 by 50 ratio of potatoes to apples, but it's only possible since they are each valued at $1. One of these might increase in value once they begin trading. Consequently, it should cost more than $1. Another illustration is that if there are 50,000 apples and 50,000 potatoes, then the sum of both must be 2.5 billion. Let's imagine that a farmer of potatoes shows up with 7,000 potatoes to exchange since they are desperate for some apples. Giving the genie the apples, he then waits while the genie calculates how many apples to give him. The genie's lamp currently contains 57,000 potatoes, but we need to know how many apples to give the potato farmer. Let's begin by doing some math. By multiplying 2.5 billion by 57,000, we get 57. You might be curious as to why the solution to this math problem is 43,859. Thus, this is the number of apples that ought to remain in the genie's lamp. There are currently 50,000. Therefore, all we need to do is calculate the difference and send it to the potato farmer. The difference is $6,140. So that's what we have. Therefore, we give the potato farmer 6,140 apples. You might be wondering why we gave 7,000 potatoes but only received about 6,000 apples at this point. Indeed, when more and more apples were consumed, their price increased. This is the reason the farmer didn't receive exactly 7,000 apples back. Currently, the genie's lamp has 43,859 apples and 57,000 potatoes. 57,000 times 43,859 equals 2.5 billion. Therefore, the magical genie is still happy, so make sure you didn't upset him. Examples of finding out how much each asset cost in dollars. Since the magical genie claimed to have valued the apples at $1 each and there were 50,000 of them, let's assume that there was initially $50,000 worth of apples. Therefore, while determining their worth, all we need to do is maintain a constant of 50,000. Since we have that many potatoes, their value would be 50,000 over 57,000 or 87.7 cents per potato. This is how much each asset should be valued. You might be curious as to why they decreased from $1. Well, it's because someone gave the genie a lot more of them. Supply and demand. Plain and simple. If you could, for instance, produce gold on trees in your garden, gold would suddenly become much more affordable since there would be so much more of it. The more there is in the genie's lamp, the less it will cost. What really is a liquidity pool? There would be $50,000 over $43,859 to determine the cost of apples. This indicates that the apples are priced at $1.14 per fruit. Because there are fewer of them in the liquidity pool, their price increased, since the potato trader took out a lot of apples while contributing a lot of potatoes in the liquidity pool. According to the equation x times y equals k, supply and demand are primarily to blame for the price changes of apples and potatoes. Another 10,000 potatoes are raised by a potato farmer. The pool contains 67,000 potatoes. We need to know how many apples to offer the potato farmer, so we divide 2.5 billion by 67,000 to get 37,313 as our answer. Accordingly, the pool of apples should include 37,313 apples, but there are currently 43,859. The potato farmer had to pay even more for these apples this time because of the rising cost of the liquidity pool, so we just calculated the difference and gave him the amount, which came to $6,546 this time. In this manner, the supply will never run out and the price will rise exponentially as he purchases more. Therefore, there are currently 67,000 potatoes and 37,313 apples in our liquidity pool. As a result of both of these figures add up to 25 billion, the algorithm, the genie, is content. According to the calculation, the potatoes are worth $70.46. When the price of $50,000 is divided by the number of potatoes, they fell even further. The apples are now worth $1.34 since $50,000 divided by 37,313 apples represent a value change. Again, we saw that there were more potatoes than before as a result of price increase. Conversely, there were less apples than before as a result of a price decrease. As more and more people buy a certain item, the price rises, thanks to an automatic market maker. When it comes to price, the algorithm always wants the worth of what it is holding to be 50 by 50. Thus, the apples have cost more since there are fewer of them. Therefore, the total would still be $50,000 worth of apples and $50,000 worth of potatoes if you multiply the price of each item by the total number of assets in the liquidity pool. A real liquidity pool occasionally contains assets with a value of up to $1 million. Furthermore, you should be aware that price stability increases with the amount of money in a liquidity pool. The price differential wouldn't alter as much as it has in our example even if there were 500,000 apples and 500,000 potatoes, and you still only wanted to trade about 2,000 apples since the number of apples you were exchanging was very little in comparison to the number of apples in the pool. Investors are rewarded by liquidity pools, and investors are those who provide funds to the liquidity pool. First of all, they share a little portion of each trade that occurs in their platform with those investors. If someone is trading numerous times a day, even if it just amounts to a little percentage of each deal, the numbers really add up and the investor may benefit. From our discussion, what have you learned about automated market maker? Are you astounded by it? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to our channel Metaverse for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!